CNBC TV18, celebrating 15 years of leadership.
Good evening. Welcome to Markets Today. In the Mumbai studio, I'm Sonia Shenoy, and joining me from the Delhi News Centre is Surbhi Upadhyay. Well, things have looked good in the last week of 2014. It's started off on a positive note. In fact, Surbhi, not bad for the frontliners, for the broader markets as well, about a 0.5% gain apiece. But the volumes were so very low, just indicating that everyone except you and me is on leave.
Yes, absolutely. Hi, Sonia. I didn't want to play spoil sport by pointing out that volume picture, but then you said it. There's no escaping that. I think the market is in holiday mode, and we have to take it with a pinch of salt. But so far, the screen looks good, I guess.
Yes, it does. So let's take our viewers through all the top headlines, and then we'll read out what the top news flow was. It was a positive start to the last week of 2014. The Nifty gained about 0.5% today, while Midcaps outperformed. The volumes were very low today, as the market is clearly in holiday mood. Cash market volumes were just about 10,000 crores.
In stock action, metal stocks are the big gainers today, with Sesa Sterlite and JSPL up 4% each, while banking stocks like PNB, Kotak and ICICI Bank are down 0.5% to 1%.
And the mid-caps outperformed the frontliners today. So you did have names like Aban Offshore, HOEC, IFCI and IVRCL gain about 3 to 15% apiece.
All right, so lots to cover over the next 30 minutes. Here are the experts that we've lined up on the show for you tonight. Market perspective coming in from Ajay Bodke of Prabhudas Leeladhar, as well as Sudarshan Sukhani, who will be joining in to talk about technicals. We will also be getting you a whole host of corporate reactions from India Inc. to talk about their expectations from 2015.
All right, that's what's happening in the next half an hour. But first up, let's tell you about the markets itself. Like I mentioned earlier, it was a positive day. Although the markets did come off their day's highs, the Nifty managed to do about a 0.5% gain. Just at that 80 to 50 odd level was the close for the day. The mid-caps outperformed today. So while the Nifty gained about 0.5%, the mid-caps gained a tad bit more than that, and the market breadth was positive as well. The volumes were on the lower side, as we mentioned, but if you're looking out for individual spaces, then two spaces did well. The metals and the cement stocks gained quite a bit today. You had names like Sesa Sterlite, JSPL, Hindalco, Tata Steel that were all up anywhere between 3 to 4 odd %, while cement stocks like Ambuja and Ultratech also did quite well today. You'll see the green tick on your screen, up about 1 to 2 odd %. A couple of other heavyweights like Asian Paints and Tata Motors also staged a good rally, about 2 to 4 odd %. While on the losing end, it's interesting, today the markets rallied despite no participation from the banking space. So you did see Punjab National Bank, Kotak Mahindra Bank, ICICI and IndusInd that were down about 1% or so. And in the mid-cap space, you had some good participation come in from names like Aban Offshore, Hitachi Home, TVS Motor, IFCI and IVRCL. All of these stocks gained about 3 to 4 odd % or so. Surbhi?
Right, so that was the picture in the market. Let's get some market perspective going now. Ajay Bodke, Head of Investment Strategy and Advisory at Prabhudas Leeladhar, expects the markets to test its previous highs before the budget and an earnings growth of around 13.5% to 14% in FY15.
In the interregnum between now and budget, I think my expectation is the market should consolidate between, say, 8,000 levels on the downside, which would be very difficult, in my opinion, to break. And on the upside could test the previous highs. We could obviously see some sort of a rally before the budget. But I think the government needs now to use this opportunity between the two sessions to push through as many administrative reforms as possibly they can. We are penciling in for the full FY15 a growth of roughly 13.5 to 14% in Nifty earnings. We are looking at around 449 rupees of earnings for Nifty for FY15. I think the results will be more or less in line as per our expectations. And some of the sectors we believe which will be leading the growth will more or less be similar as what we saw over last 2 quarters, namely the private sector banks and NBFCs as against the public sector banks would lead the charge in the BFSI space. In the cyclical space, we believe that the auto companies will lead the charge.
Alright, so that's the word coming in from the fundamental expert. But now let's get some action from the futures and options space. Let's find out what took place. Let's go across to Varinder Bansal. Varinder.
Well, slow, steady and up moving. The markets were holding up and all indications coming from options market clearly suggest that markets are more like on the upside. We were seeing huge put rating happening at 8200, 8300 level. 8200 in fact added nearly 6 lakh shares in open interest. 8300 also added nearly 5 lakh shares in open interest. On the upside, you are seeing 8500, 8600, 8700 call also, adding open interest, and the premium is moving higher. As I said, indications that the markets is looking upwards in the coming few days. Stock of the day has to be TVS Motor. The stock was up nearly 3%. Open interest moving up by nearly 14%. In the last half an hour or 1 hour, two stocks, particularly in the auto component space, especially MRF and Bosch, the way they moved. MRF was up nearly 5%, open interest moving up on the long side, and even Bosch was up by nearly 2%. Again, long build-up seen over that stock. Asian Paints was one of the strongest stock, and in fact the biggest gainer in Nifty was up nearly 4.5%. Long build-up seen over there, and most of the metal stocks which you have been referring to, whether it was Sesa Sterlite, SAIL or JSW Steel, all were moving up on back of short covering. Tata Motors also saw some short covering happening in the stock, was up by nearly 2%. And watch out for two stocks, Havells and IFCI. Havells clearly, because the stock movement may not be much, up nearly 0.5%, but you were seeing open interest build up of nearly 30% on that stock, clearly suggesting some accumulation was happening in. And also on IFCI, we saw the stock moving up by nearly 4% after a long time, but you are seeing build up happening in and long accumulation happening on that stock as well.
All right, Varinder, thanks so much for that. Let's then move to the big story all through the day. It was really the limelight in the market session today. The uproar in the Rajya Sabha may have blocked some crucial economic legislations, but the government's ordinance spree is all set to continue. After the ordinances on insurance, coal and motor vehicles, next on the list are changes to the Land Acquisition Act and the Mines and Minerals Development and Regulation Act. Shares of companies like JSW Steel and Sesa Sterlite were rallying in trade today, as we told you, on the back of all this buzz. We have now Pragya Bhardwaj joining in to explain what can be expected and what are the kind of changes the government is looking at bringing in. Pragya, let's talk about the mining ordinance first, because we had all these metal counters get so excited in trade. What are the key changes to the original act that the market is expecting?
Oh, absolutely. The amendments to the MMDR Act, as we understand, have been pending for quite a long time, with both of the previous governments, UPA and the NDA, floating various, amendment norms at certain points of time. Now, what the analyst community believes is that the MMDR Act, if it does come by at some point of time, could in fact potentially pave way for the auction of iron ore and in fact other minerals, especially in the case of notified minerals like iron ore, bauxite, manganese and limestone. If the auctioning of mines does come by, then it could be positive for companies like JSW Steel and Sesa Sterlite. The other important proposed changes that we've been highlighting since morning is the fact that the mining ordinance can actually give the centre a lot more discretionary power over the states. What this means is that the central government, we understand, could be empowered to prescribe terms and conduct for the auctions of both the notified minerals and the non-notified minerals as well. The government will be able to fix timelines for various approvals required in the mining process. Basically, what the analysts believe that any discretionary power given to the central government is actually positive for the industry, given the fact that it will enable the auctions to happen in a more transparent way and in a speedier way as well. The other thing is slightly more technical, is that the bill imposes an additional levy which would be related to the royalty payment. Now, like the previous version, this bill also calls for the setting up of a district mineral foundation in the mining affected areas. This amount would be actually linked to the overall royalty. The quantum at this point of time is unknown, but a lot of the analysts believe that this overall amount could be actually less than or equal to the royalty which is being dished out right now. If that indeed is the case, then actually that could provide a lot of relief to some of the captive miners like Hindustan Zinc, Godavari Power and Ispat, Sesa Sterlite, Tata Steel and Steel Authority of India. The third thing that is being spoken about is that it will be able to address some of the recent issues that we've seen on the illegal mining front. A lot of these offences will actually be made a cognizable offence to a certain extent, and the central government will be able to pass revision orders in case if there is any delay by the entrusted authority. So a whole host of positive, not just company specific, but for the industry as well, as and when this does come by.
All right, Pragya, thanks for that. Well, the industry is throwing its weight behind the government to bring in an ordinance for mines and minerals. G.D. Mundra, the director of Sarda Energy, who we spoke to earlier in the day, said the centre's move is a step in the right direction. Take a look.
If the timeline is fit, when we have complied with all the requirements of prospecting and we are submitting the application, within a certain time list, 90 days, 60 days, 120 days, either it should be accepted or rejected, and there should be a reasoned order. So if this ideas is coming through the central government, I think it will be really good for whole mining sector, because all uncertainty will put to rest, and this will be really good for the industries.
All right, and moving on, Finance Minister Arun Jaitley has called for radical reforms to boost the manufacturing sector. Speaking at a workshop on the government's Make in India drive, Jaitley made his pitch for easier entry norms and an internationally acceptable tax regime and an enabling environment to make India an international hub for low-cost and quality manufacturing.
Manufacturing is where jobs are. And manufacturing is an area where we have still to grow and grow at a much faster pace. The entry point into the manufacturing sector itself has to be eased. Our initial barriers have to be lowered and perhaps even removed. If we keep the doors closed, investment won't come in, it won't trickle in.
The Cabinet today cleared an ordinance to make land acquisition for projects which come under the public-private partnership route easier. Lata Venkatesh now joins in with all the details. Lata, it's been quite significant and a development that industry was really hoping for.
After the closure of the market, the Finance Minister announced that they are amending the land bill through an ordinance. Now, basically, there is no relief on pricing. Whenever you acquire land, the same kind of pricing has to be paid by all parties as is there in the land acquisition bill. But for 5 specific categories, there are some procedural exemptions. That is, for these 5 categories, the people who are buying the land don't have to require the consent of 80% of the landowners. And they don't have to make a social impact analysis, which is a very demanding exercise. Now, which are the 5 exempt sectors? When you're buying land for defense and defense-related production. 2, when you're buying land for rural infrastructure and electrification projects. 3, when you're buying land for affordable housing. 4, when you're buying land for industrial corridor, like the Delhi-Mumbai Industrial Corridor. And 5 for infrastructure and social infrastructure projects, especially in PPP projects. There, however, the land should be owned by the government. So basically, sectors like this are likely to see a rise in share prices tomorrow. You know, defense projects, defense-related companies like Bharat Forge, L&T, rural electrification companies, affordable housing companies like Puravankara. These are may gain in trade tomorrow. Those that could lose will be the metal stocks. They ran up today on the expectation of the mines ordinance. That didn't come today, but it could well come later on in the week.
All right, and as 2014 draws to a close, we ask experts from within the banking space what they expect to see in the year to come. KK Mistry, Vice Chairman and CEO of HDFC, expects to see lower lending rates in 2015. But will the bad loan troubles persist? DK Mittal, the ex-secretary in the financial services, says regulatory changes will help in that regard. Listen in.
Asset quality problems have arisen A, because of a regulatory imperfection, B, because of overall infrastructure not being appropriate, and thirdly, because of bad lending. Now, all the 3 factors together have created a havoc with the public sector banks. If we don't address the issue of regulatory imperfection, this issue will continue.
Cost of money will come down or should come down as RBI lowers rates. I don't know whether it will happen in the next month, in the month of January or February. I don't think so. If we look at 2015, and if I was to look at it today, 2015 will clearly see lower borrowing rates and therefore lower lending rates compared to what we saw in 2014. But if you are a home loan customer and, for example, you've taken a floating rate loan, then you will get the benefit of falling rates in 2015 when rates come down.
All right, time for a break now, but coming up on the other side, Sudarshan Sukhani joins in for a technical chat. We'll also get you some trading ideas for tomorrow.
CNBC TV 18, celebrating 15 years of leadership.